What if one of the most talked about investment opportunities right now costs less than a few pounds per share? Today, Tuesday the 14th of July, 2026, TON Strategy, trading under the ticker TONX, has just been identified by analysts as one of the 10 fastest growing tech penny stocks worth serious consideration. That's not a small claim. Thousands of penny stocks exist across global markets, and being named in a top 10 list of the fastest growers in the technology sector is the kind of recognition that sends retail investors scrambling for answers. So today we're going to give you those answers. We'll look at exactly what TON Strategy does, why it's growing, what the numbers actually say, and, crucially, what the risks are before you put a single pound into it. Because in the world of penny stocks, the line between opportunity and disaster is razor thin. Let's start with the basics, because far too many investors buy into penny stocks without understanding the underlying business. TON Strategy, ticker symbol TONX, is a company operating at the intersection of blockchain infrastructure and digital asset strategy. The TON in its name refers to the open network, the blockchain originally developed by Telegram and now maintained by an independent open-source community. TON has grown into one of the more active Layer 1 blockchain ecosystems globally, boasting transaction speeds and low fees that have attracted significant developer attention over the past 2 years. TON Strategy positions itself as a company building financial and operational tools on top of this network. Think treasury management, tokenized asset exposure, and blockchain-native financial products. As a penny stock, TONX shares trade at a relatively low per-share price, which lowers the barrier to entry but also reflects the company's early-stage nature. It is not a blue-chip holding. It is a speculative bet on the growth of a specific blockchain ecosystem. As of today, the 14th of July, 2026, TONX has been featured prominently in financial media following its inclusion in a curated list of the 10 fastest-growing tech penny stocks to buy. The timing matters. We are currently in a period where institutional interest in blockchain infrastructure companies has rebounded meaningfully from the broader crypto market contraction of late 2025. The TON blockchain itself has seen a notable uptick in active wallet addresses and daily transaction volumes throughout the second quarter of 2026, driven partly by Telegram's continued integration of TON-based payment features into its messaging platform, a platform used by hundreds of millions of people globally. For a company like TON Strategy, which has tied its commercial fortunes directly to the health and adoption of the TON ecosystem, rising on-chain activity translates into a more credible growth narrative. That narrative, combined with its low share price, is precisely what has drawn analyst attention this week. Several developments have converged to make TONX newsworthy in the current moment. First, the broader regulatory environment for blockchain companies in certain jurisdictions has become somewhat clearer over the first half of 2026, reducing a layer of uncertainty that previously suppressed valuations across the sector. Second, the TON Foundation has announced expanded developer grants and ecosystem fund allocations, which signal continued investment into the network that underpins Tonx's business. Third, and perhaps most directly relevant, is that small-cap and penny stock-focused analysts have recently begun screening for companies with verifiable exposure to high-growth blockchain networks rather than companies simply claiming a blockchain connection in name only. TONX appears to have passed that screening, which is how it ended up on this particular top 10 list. For investors, this distinction is critical. Not all blockchain penny stocks are equal, and being selected by analysts who apply a genuine filter carries more weight than simple promotional coverage. Let's talk figures, because vague claims about growth mean nothing without data to anchor them. While precise real-time share price data changes by the minute and you should always verify current figures through a regulated broker or financial platform before acting, the context here is instructive. Penny stocks classified as fastest growing by analysts typically meet certain threshold criteria: meaningful percentage gains over a defined recent period, increasing trading volume relative to historical averages, and a business model that shows at least some path to revenue generation. Tonx's inclusion in this list suggests it has met those criteria in the eyes of the analysts who compiled it. It is worth noting that percentage gains look especially dramatic on low-price shares. A stock moving from 10 pence to 20 pence has technically doubled, which sounds extraordinary but represents only 10 pence in absolute terms. Investors must keep both the percentage and the absolute movement in mind when assessing whether Tonx's growth story is genuinely compelling or simply a function of its low starting price. Being named on a fastest-growing tech penny stock list has a real and measurable impact on a company's share price and visibility, often within hours of publication. Increased analyst coverage drives search volume, which drives retail investor curiosity, which drives buying activity. This is sometimes called a catalyst event in investment circles, and it can produce short-term price movements that are entirely disconnected from the company's underlying fundamentals. For retail investors watching Tonx today, this means two things. On one hand, there is a window of heightened attention during which the story is in the news cycle and liquidity may be higher than usual, making it easier to enter or exit a position. On the other hand, buying a penny stock immediately after a positive news event means you may already be purchasing at an elevated price relative to where it traded before the coverage. Timing matters enormously in this space, and chasing momentum without a clear exit strategy is one of the most common mistakes retail investors make with small-cap and penny stocks. No responsible discussion of a penny stock is complete without a frank conversation about risk, and Tonx is no exception. Penny stocks carry a specific set of risks that do not apply in the same way to larger, more established companies. Liquidity risk is real. Low price, low market cap stocks can be difficult to sell quickly at your desired price, particularly if the market moves against you. Volatility risk is amplified. The same factors that produce rapid gains can produce equally rapid losses, and Tonx's value is closely tied to the fortunes of the TON blockchain, which itself is subject to the broader volatility of the digital asset space. There is also concentration risk. If Ton's ecosystem growth stalls, or if a competitive blockchain captures the developer and user base that TON currently serves, Tonx's commercial rationale weakens considerably. Finally, as with all penny stocks, investors must be alert to the risk of promotional coverage that overstates a company's prospects. Always read primary sources, check company filings where available, and never invest more than you can afford to lose entirely. Looking ahead from today, the 14th of July, 2026, the near-term trajectory for Tonx will likely depend on three interconnected factors. First, the continued health of the TON blockchain ecosystem, specifically, whether active user numbers and on-chain transaction volumes maintain their upward trend through the second half of the year. Second, whether the company can demonstrate any concrete revenue milestones or product launches that translate the broader ecosystem growth into actual business performance. Third, the macro environment for speculative technology investments more broadly, as rising interest rates or risk-off sentiment in global markets tend to hit small-cap and penny stocks harder than more established holdings. If the TON ecosystem continues to expand and Tonx delivers even modest evidence of commercial traction, the analytical case for continued share price appreciation remains intact. If either condition fails to materialize, the downside for a penny stock at this stage of its development could be swift and substantial. So here is the bottom line. TON strategy, ticker TONX, has earned a place on the radar of investors interested in fast-growing tech penny stocks by combining a clear blockchain focus, specifically the TON network, with a moment of genuine ecosystem momentum. As of today, the 14th of July, 2026, the company is benefiting from increased analyst visibility and a relatively favorable backdrop for blockchain infrastructure companies. But this is emphatically a speculative, high-risk investment. The same characteristics that make it exciting, low share price, high percentage growth potential, exposure to a fast-moving blockchain ecosystem, are the same characteristics that make it capable of losing value rapidly. Before considering any position in Tonx, do your own due diligence, consult a qualified financial advisor if appropriate, and ensure it fits within a diversified portfolio where no single speculative holding represents a disproportionate share of your capital. Knowledge is your best tool in the penny stock space. And now you have a little more of it. Thanks for watching.